All right, everybody, here we are. It is Monday, August 12th, 2019, the start of a brand new week. And another moment to just turn it all around. So whatever happened over the weekend that just went bad for you, brand new start. Use that to your advantage. All right, with that said, let's talk about these markets here. As I am doing this video blog, stocks are under pressure across the board. Dow Jones Industrial Average down almost to 200 points. All right, nothing major going on here. However, let's talk about the bond market again. Right now, as I am doing this video blog, the spread between the 2 and the 10-year Treasury is 8 basis points. The 30-year is right now very close to yet another historic low. It's baffling to me, honestly, that if you were to turn on the Confederacies of Dunces, you know who these people are, they don't talk about it. All they want to talk about is opportunities to buy stock. What they won't tell you, again, and it really freaks me out, is that the value of the entire stock market, the value of everything derives value from the bond market. Understand what that actually means. So if assets price off of what is happening in the bond market, that means literally that everything else is a derivative of what's occurring in the debt market. Now, I want you to think about this too. So when we're talking about the debt market, this is also a financial instrument that is leveraged. In other words, there are layers of derivatives laying underneath that. It's a mind-blowing concept. If you were to factor in all of this together, we are in the multiple quadrillions with regard to dollar-denominated derivatives here. It's an unbelievable situation. I mean, it's so big that even myself, I try to think about it. I almost kind of push it out of my brain sometimes because it's monstrous. But again, the issue is very simple. We are literally right now, and I explained this to you, I think last week, on 210 inversion watch. Now, when this occurs, notice I said when the inversion, in other words, when the 10-year yields less than the 2, you're going to hear a lot of spinning on the financial channels. They always spin everything. Every politician spins everything. Every one of these pundits, these professionals are going to spin it. You're going to have CEOs paraded out from major corporations, banks, explaining to you, oh, it's fine. But what they won't tell you is the 2 to 10 inversion has correctly predicted every single recession, depression, and market crash in history. It has never failed once. That says something. And the fact that right now we have a 30-year, I mean, it's mind-blowing, near a historic low, that says something as well. Look, again, the bond market has proven throughout history to always be right. And because the stock market is valued, or the valuations in the stock market are priced off of what's happening in the debt market, the stock market is kind of a derivative, like I explained to you. And derivatives are kind of hard to get right. I'm a derivatives trader, so believe me, I know this. So understand where we are, where we're at. I really honestly want you to download, and I'm not trying to promote the CNBC or other app, but the CNBC app for the bond market for your phone there. Just look at that. Look at the 1 month dominating the entire yield curve. I mean, look at the 2-year. My God, 1.59, 10-year. 30-year. Oh my goodness, I think we just hit a historic low on the 30. We're darn close to it. But get that app on your phone and start following the bond market action, because that's how you're going to know what's going to occur. And again, I want to put this again into perspective because I keep getting questions about it no matter how many times I say it. When this inversion occurs, Doesn't mean the market's going to crash or melt down at that moment. I believe we're going to have a lag time. I also believe, despite the fact that stocks are lower now, there is a very strong possibility we're going to get another run higher at that high just before stocks fell 700 points. We've had 2 failed attempts right now, 2, to break through that high before the drop. It looks to me still, despite stocks being lower right now, that another attempt is going to make to break through that. We'll see. It may not happen. Understand, look, 2 attempts may be enough. It may just drop. But the bond market is really where we have to be looking. Something I have explained to you since day one. I'm talking about over a decade now. You got to watch that bond market. You have to understand how everything derives value from what's happening in the debt market. In the debt market, not only is it a time bomb of epic proportions, it is a harbinger of what is coming beyond any shadow of any doubt. And don't let any single, I was just going to say something very bad. Don't let any very nice person from the financial channels or a CEO of a corporation or a bank or the president or anyone else tell you different. Because it's just not true. All right, with that said, love you a lot. Let's watch all this stuff. And I'll see you at the end of the day.